The Australian hotel and investment market has witnessed an extraordinary start to 2015, with transaction volume reaching some 1.9 billion Australian dollars, a 150% increase over the same period last year. In fact, sales volume so far this year has almost reached that of the record 2.5 billion that transacted in all of 2014. To date, some 23 transactions above 5 million have contributed to this remarkable result. Continuing the trend over the last 3 years, Asian investors have dominated hotel investment activity, accounting for approximately 65% of total transaction volume year to date. We are seeing unprecedented levels of interest. When meeting hotel investors from around the world, buyers now include Sydney in the discussion of key global hotel markets they wish to invest in, along with cities like London, New York, Tokyo and Paris. Heightened transactional activity this year has been driven by high-profile Sydney deals, namely the Western Sydney, transacting at a little over 445 million, recording the highest price per room for a large-scale hotel, and the Hilton Sydney, which recently sold for 442 million. These deals follow an exciting second half of 2014 for the Sydney market, where approximately 1.1 billion worth of transactions took place, including the Sheraton on the Park, which sold for a record 463 million, the largest single hotel asset transaction in Australian history.
In Queensland, the Pullman Cairns International transacted at 75 million. Next, Hotel Brisbane changed hands at 130 million, and the Sheraton Noosa transacted at circa 108 million Australian dollars.
The Perth and Melbourne markets haven't been as active as other markets so far this year. However, this is expected to change, with some quality hotel stock likely to transact in the balance of 2015.
For the year to date, June 2015, most major Australian hotel markets have posted RevPAR growth. The Sydney and Melbourne 5-star markets continue to be the star performers, with Sydney up 5.6% and Melbourne up 5.8%. The Queensland leisure markets, however, have displayed the most RevPAR growth, with the Great Barrier Reef increasing 37.2%, Cairns growing by 11.3%, and the Gold Coast rising 8.9% over the same period.
Looking forward, we expect this great level of investment activity to continue for the remainder of the year. A new record of sales volume for Australian hotels could absolutely be broken in 2015, potentially making Australia the strongest hotel investment destination across Asia Pacific. Furthermore, the demand experienced in the Sydney hotel market is also being felt across the wider investment market, with flow-on effects for both major cities and regional hotel assets. Trading across the country is expected to remain robust, and following on from the first half of this year, there is still exceptionally strong demand from buyers to acquire quality Australian hotel assets. Thank you for joining me for JLL Hotels and Hospitality Group's Australian Market Update. For further information, please do not hesitate to call one of our team members or visit us at jll.com.au/hospitality.